Hi, this is Lee Gant with Georgia United Credit Union. Thanks for joining me today for Teens and Finance. In today's session, we will provide some practical tips to help young people understand money and managing finances. We'll be touching on the benefits of managing your money at any age and in any amount, the role of family in teaching about finances, how savings is a gift and the importance of protecting your money, basic banking and how your money grows, saving for a goal, and even about your credit score, the impact of credit, and we'll touch base about identity theft as well. Before we dive in, let's talk a little bit about the difference between a credit union and a bank. For those of you who don't know, Georgia United is a not-for-profit financial cooperative. This means that we are owned by our members and we keep the best interest of our members as our top priority. Because we work for our members and not stockholders, we help you keep more of your money by charging lower rates of interest on loans and paying higher rates of interest on savings. With that being said, let's dive into our topic. Whether you have a lot or little, you are in control of your money. No matter how much you have, your money equals your decision on how to handle it. Managing your money saves time and stress. Financial stress can take a toll on your health, your relationships, and your family. It also helps to reach your goals and financial peace when you take care of your money. Can you think of an advantage of saving money? What might you be wanting to save for? The things that you may want to save for are called goals. Now, here's the golden rule. Your parents have the gold, so they make the rules. This may be true, but the reason why I bring it up is to demonstrate that parents are your primary teachers of money management. Society says it's rude to discuss money. For example, you don't ask someone how much money they make or how much money they have. However, in the normal course of life, your family will experience teachable moments that you don't want to miss. For instance, when your car needs new tires or your air conditioning breaks, talk about it as a family. What choices do you have when you need money? Rule number 2, if you learn nothing else today, please remember this. Spending gives your money away. Savings gives it to you. Pay yourself first. If you will save your money, you'll never regret it. And you know, the more you do something, the easier it becomes. So make savings a habit now, and it'll come more easily later in life. But money does matter. Once it's gone, it's gone. So remember to pay yourself. Let's talk about spending. So, if you like Starbucks, you may want to get yourself a $5 cup of coffee. Or maybe Starbucks isn't your thing. Maybe it's the number 4 combo at Sonic. Whatever your thing is, if you spend just $5 a day, 6 days a week during the school year, which is 36 weeks, you will have spent a whopping $1,080. So all those little expenditures really add up. Banking basics. What is a bank account and why do you need one? Your bank account is probably the most important financial decision you'll make because you'll use it every day in your day-to-day life. So what makes a good bank account? Well, here's some questions to ask yourself when considering a bank account. Should you have to pay for your account? Is your money insured? Meaning, will it be protected if something happens? How well can your money grow with your bank account? Will you receive the benefit of interest payments? What are your saving options? And where will you go to make your deposit? All of these questions are important, But the most important one is, should you pay to use your own money? And the answer is no. You should never have to pay to use your own money. You give your money to the bank, they get to use it while they're keeping it safe for you, and then you pay them? Or would it make more sense if they pay you? So never pay to use your own money. Also, watch out for hidden fees. Make sure you understand all the fees before you open your account. Some banks will charge you to speak to a human or get paper statements, or if you use your account too much or too little. So you've got your bank account. Now what are you going to do? How does your money grow? Do you have a checking account or a savings account? Money market? There's even accounts called certificates of deposit, where you agree to leave your money in a certain length of time and a bank rewards you with greater rates. And how will you come up with the money to put in your account? Do you have an allowance? Can you save some of that? Are you able to do some work in your neighborhood? How about your parents? Could they contribute to your savings? Perhaps there's a chore around the house that they dread, like pulling the weeds. Maybe they might be interested in paying you to take that off of their plate. Now let's talk about another aspect of growing your money, interest. We did mention interest earlier. So if you have $5 coins, you keep them on your dresser for a year. At the end of the year, you're going to have $5 coins. However, by putting your money in the bank and earning interest, that means the bank pays you a little something for the privilege of having your money there. So say you put in 1 coin and you earn interest, now you have 2 coins, and the 2 coins start earning interest. You see, you start earning interest on interest. That's the power of compounding returns, otherwise known as compound interest. Saving for a goal. Goal setting is really important, and we discuss setting it with the SMART method. The SMART method of setting goals means they are specific, measurable, attainable, relevant, and time-bound. Let's go through an exercise where we travel through each of these components. Say that you were shopping with your mother and she saw a scarf that she liked, and you wanted to buy her that scarf. The price of the scarf is $15. That's measurable. Of course, the scarf is a specific item you're buying. And is it attainable? Can you save your allowance in order to buy that scarf? What about realistic? Sure, I can work to earn $5 a week, and Mom's birthday is in a month, so I should have enough money to get that scarf. That makes it timely. It's important to save early. If you put away your summer earnings for 4 years from ages 15 to 18, and you are earning, say, 7% a year, by the age of 65, you'll have $107,000. But if you wait until you're 25, and then you put away $1,000 for 4 years until age 28, and you stop, the account will only be worth a little over $50,000. Bottom line, if you start at age 15 rather than 25, you can double your savings come retirement time with no additional work. Check writing 101. Do you know how to write a check? It's important because writing a check is like making a financial contract. Let's look at the elements of the check. So you're saying, on this date, I will pay this person this amount numerically, and then in writing, and with my signature, I promise. Here's a helpful hint. If the numerical amount does not match the dollar amount written in words, the written amount becomes the legal amount. As you travel your course of adulting, eventually you're going to want to have established credit. Why? so you can pay for large purchases over time. You have to start small. That's why I recommend a credit card. You can use it for your gas and just use it, pay it back, use it, pay it back. And if you have no credit that you've earned so far, you might open a secured card by putting savings that's held as collateral for your credit card. Another way you can earn credit is by being an authorized user on your parent's card. You're not responsible for it, but it does help you earn credit. Additionally, always pay your bills on time. That way, when the time comes, you will have established an excellent payment history. So you've probably heard about a credit score. Based on your credit history and a few other factors, you're assigned a credit score, and it can start at anywhere from like 350 to 800. So what's the components that make up a good credit score? The higher the score, the better your credit. Well, 35% of it is credit history, and that's simply paying your bills on time, and you can handle that. Another 30% is credit capacity. You know what that means? That means not maxing out your available credit. So if you have a credit card for $500 limit and you're using all 500, you have zero capacity, and that's going to make your score go down. So the less you use of your available credit, the higher your score, and that's 30% of the overall score. 15% is how long you've had credit. 10% is what type. You can have installment or revolving. Revolving is like that credit card that you pay, pay, and use. Installment is like a car loan where it has a set beginning and a set end, and you pay an even amount along the way. Another 10% is how many inquiries you've had. It's not good to go out and ask for a lot of credit all at one time. It makes it look like you're not able to handle your finances, and it makes your score go down. So how can your credit affect your life? Well, credit can affect whether or not you get a job. Employers sometimes pull credit, and if they're trusting you with financial matters and you can't handle your own finances, you're likely not to get the job. Insurance companies now use credit scores. They're determining whether you're a person with risky behavior. If you have risky behavior, you probably drive risky too. And loan rates. The better your score, the better your ability to pay. So you'll get the best interest rates. You'll get the lowest rates of interest. So let's look at a car loan. Say you have bad credit, so the bank is asking for 14% interest on your car loan. On a $20,000 loan over 5 years with a payment of $465, you're going to pay almost $6,000 more at 14% interest than if you had excellent credit and you got a rate of 4% interest. And no financial discussion would be complete without talking about identity theft. It's never too soon to be concerned about your identity, and there's a variety of ways that you need to watch out for yourself, starting with your passwords. Use a variety of passwords. Be unique, something that no one would guess if they stole your wallet, like a pet's name or a nickname. Substitute numbers for letters, like a 3 for an E, or symbols. And remember, don't carry personal information like passwords or social security numbers in your wallet, or don't keep it in your car glove compartment. For emails, you need to be careful. Even if an email looks like it comes from a legitimate company, if you're not expecting it or you don't have any business with that company, you need to be suspicious. Even if it is from a company you do business with, don't open a link. Go directly to their website and look the information up there. Don't fall for pop-ups. Don't open attachments. You really have to be skeptical and careful. And with getting phone calls, you need to trust but verify. That means you need to be skeptical of any calls you receive that ask for personal information. I promise you, your financial institution will never expect you to give out personal information over the phone. At Georgia United, we have youth programs that help reward you for doing well at school. Our Money Masters program comes with a checking account and a debit card. You earn $10 each semester for good grades, up to $10. That's right, we will pay you $2 per A in your core subjects, up to $10 each semester, and it goes right into your savings account. You can earn another $10 each semester for doing community service. Also goes right into your checking account, your savings account. And in that case, we match it to Children's Healthcare of Atlanta. So you're helping yourself save, you're helping your community, and you're helping sick children. So you see how doing the right things educationally can be financially rewarding. Also, when you're a high school senior, you might want to apply for one of our scholarships. We give scholarships to high school seniors to help them pay for college. For those of you who have siblings, kids that are 11 and younger can have a Money Mammal account at Georgia United. There's fun, interactive online games to play. You can earn badges and do challenges. There's 4 apps that you can download to an iPhone or Android. It's a really neat way to learn about money. There's also coloring pages, videos, and information for your parents. So you see, managing money is a part of life no matter what age you are. Don't be afraid to try some of the ideas in this presentation or to ask your parents what's worked or not worked for them in managing their finances. If you have a question about Georgia United or anything we've covered today, you can reach out to me or contact Member Care at 770-476-6400. I want to thank you for joining us today for Teens in Finance. I enjoyed being with you. Bye-bye.